Hey Vegas, thank you for joining us again right here on Realty Check, your local Las Vegas real estate news show. I'm your host, Trish Williams.
I'm your co-host, Tiana Carroll, and today we have one of our favorite lenders, Mr. Brad Watts from JFK Financial, here to talk money with us in this market.
And lots of good stuff that you had. I was looking at your list of topics today, and I'm like, wow, that's good. How come I didn't think of that?
I know. Each bullet point, I was like, oh, I can't wait to talk about that. Oh, that's going to be good. Let's do that. Oh,
Yes.
I like that one too.
So this is going to be great. Thank you, Brad, for being here.
Thank you for having me, obviously. Yep.
Yes.
Always a pleasure.
Always a pleasure having you back. Brad is a returning guest.
Yes.
And before we get into that, let's talk about what's going on. Actually, first off, if you did not join us this year at our annual trunk or treat, we do have some photos that are going to be out there. Oh, there they are.
Yep,
That's
there
us.
they are. Yep.
There's us. Hey, make sure that you join us next year. We do this every year. It's free. If you don't recognize us, that tall blonde
I was going to
is
say, with that
Cruella.
crown on your head, you look like you're as tall as I am.
Right.
I was just trying to get up to your height. So we had a great time. There was so many people that showed up, and we do these client appreciation events every quarter. Come out, join us, see us, meet us, talk to us. We'd love to talk to you. So.
Yeah, it was such a great time. We had so many past clients come in, so many people who were, dipping their toe in the water, but really it was all about family and giving back, and those children were having a blast and just walking away with tons of candy because we had such great participation.
Yeah.
Lots of sponsors, lots of agents. It was really great. Next time we have one, you guys should come out and check them out.
Come out and say hi. We'll always announce them here. So our numbers this week, we have some numbers of what's going on in the city. Our current single family inventory, 7694.
Okay.
Yep, so that's down 300 to 400 homes from last week because we were playing right underneath that 8,000 mark, and now we're getting closer to the 7,500 mark. So
Yep. Price reductions, 1382. So
less of those happening.
when I seen that, I was like, wow, that's a good sign, right? And then I was like, wait a minute. I think maybe there's less price reductions because people are getting burnt out on reducing the price. We're getting price reduction fatigue, right?
Yep, I would agree with that.
Yep.
Yeah, when I was looking at the numbers, so I kind of went through and nosed around like what those reductions look like, and I think that it's a few contributing factors, right? It's less people are coming on the market. And then people who are coming on the market now are aware of the climate that we're in, and they tend to come in more at the current market value than their inflated, greedy, I want all the money price. And then some of those price reductions, much like the price increases, because we had those this week too.
65 price increases. And I was like, who are these people?
Right, but when I was peeking through the number, a lot of those price increases as well as the decreases are just agents fiddling with the numbers, $100, a few $100, so that way they keep coming up to the top of the list.
So you come up as a new listing.
Yeah, like every 7
Yep.
days, they just adjust just a hair up or down either way, so that
Right.
way they can always stay at the top of that hot sheet so other agents see it, which in itself is its own version of marketing.
I do remember a couple years ago, someone had like called my broker about that because I did that, and they were like, that's churning. You can't do that. And I was like, what? So I haven't done that for a while, but it seems like everybody does do it and they seem to be okay. So I don't know.
Well, I think as agents, I'm seeing so many people sort of reassessing what their business looks like and getting fluid so that way they can make the necessary adjustments to help people best service them in this climate.
Yeah.
Yeah.
This is not a environment for overspending. We got to cut the fat. We got to really buckle down, and that's a thing right now. That's a very serious thing right now for agents.
Yeah.
I think it's never been more important to come in at the right price. I
Yes.
mean, because that's going to be critical to having a chance where a year ago, you didn't care what you put on there because
Right. Anything will do.
yeah, anything will do. Just get it on there,
Right.
because someone will make an offer, and chances are it'll be more than what you put on there.
Plus a warning to some inexperienced agents or agents that may not be as experienced or as keen on the market that we're in right now, and how different it really is. Taking those listings that are not priced to sell can really, I mean, it can bankrupt you if you're taking
Yes.
a lot of them. You have to be very cautious in this market and make sure your sellers are on board with you, because it does cost a lot to take listings that won't sell.
It does, and if you don't set the right expectations, you've got unhappy sellers, and they take that out on you. So, yeah.
They take it out on you.
Right.
They pull back. They withdraw their listing.
Right.
You're burned. You put out all this money. You don't get it back because the
Right.
home never sold, and they think it's the agent. Then they go to the next agent, and they realize it's not the agent. It's the market. But sometimes you can't convince them of that.
Right.
While they're in it, they always think the grass is greener on the other side.
Correct.
And then they find out it's artificial turf. Did you tell me
Yeah.
that? It's my new
Looks so
favorite
real,
term.
right? Yeah.
It's so pretty and green.
Right.
Yeah.
Yeah.
Yeah, and so speaking of that, total withdrawn unconditional and withdrawn conditional, this last 7 days were 420 properties.
Wow.
Yeah. Well, I think as the weather changes and we get closer to the holidays and people who were on the market still coming in with those greedy mindsets are now feeling like, oh, this isn't the right time for me to sell, and they're pulling out. And yeah, there's a lot of those.
And last year, the year before, our average expireds were always under 50. So these are numbers that we don't report every week, but this
We
morning
watch.
I'm
We
like,
keep an eye on 'em.
digging into things, and I'm like, hey, wait a minute, what's going on here? So total expires are usually like under 50 over the last couple years.
Yep.
355 expired in the last 7 days.
Yeah. Well,
So-
when they pumped the brakes on us, that took a lot of buyers out of the buyer pool. Anybody who was kind of considering it kind of got scared. And I don't think there's too much reason to be scared. I don't have the same fear that everybody else on the news that they're reporting, but it did slow down the economy, which was the purpose, right? That's exactly why they did it.
Yeah, that was their goal, obviously, was to slow everything down. So I think people are seeing they had a number in mind, and when reality kicks them in the butt, they're not getting that number. They're just letting it expire.
Yeah.
Yeah.
So
Exactly. They're giving up.
Yeah.
And then the other number that is pretty a good note to note, a notable number, is back on the market. So back on the market's houses that were in contract, and something didn't work out. 183 this week.
That's a lot.
That's a lot.
Like an appraisal.
An appraisal, absolutely.
Or
Yeah,
requests for repair, or just
Correct.
clients being, or buyers just being overly picky and
Found a better house
Yep.
after they
Right.
made an offer on this one. They found another one come up that's better. They changed their
Right.
mind. Or rates.
Yep, or the interest rate could have moved. Yep,
what they
exactly.
were pre-approved at, and then you can't lock it and get those numbers disclosed till you're in contract. So they were
Right.
pre-approved, and then they were like, whoa, what's this?
Right.
Yeah.
It changed.
Yeah,
So-
and it's changing those payments, like I guess in the average like 350 to 400 price range, it's changing those $300 to $400 a little bit higher.
Yeah, no, absolutely. And we do, and you probably hear about this. You hear about this lock-in shop stuff that lenders offer. The only problem with it is you don't get today's rate. The lock and shop stuff, they'll let you lock and shop without a property, but it's a higher than market interest rate because they don't know how long it's going to take
Right,
you.
they got to take
And
into
there's fees.
consideration.
And there's fees involved depending on how long. I mean, you can get extended lock and shop to where there's a cost to doing it. And so we really don't get a lot of it just because you're already accepting a higher than market rate.
Yeah, when I
Or
was-
you're paying for that lock and shop.
Right. When I was looking at the breakdown fee of the fees for that, I was like, nah.
Well, no,
Grind it
there-
out, see what happens. Like, it's
There's
not-
definitely ways to navigate this market, and we're going to get into that stuff with you, Brad.
Right.
Because there's definitely ways to navigate this market, both on the seller side for sellers making investments and on the buyer side. So, and I personally feel like this is a really good market because and this is only because every spring we've ever had has always had that uptick in sales. I'm expecting that
Me too.
investors are stockpiling cash right now, waiting for that uptick.
Oh,
Yes.
we're going to be talking about that too.
Right.
That's that is a very good point. That we're gonna that's what we're gonna be opening up today with. So
Yeah,
that's gonna
I
be,
always keep an eye on what the investors do because that's always the markers that seem to be the most realistic. Follow the money, baby.
Yep, and they
Yes.
are. There's still investors out there that are buying, but there's also some investors that are taking huge hits. So recently, on one of my purchase transactions where I was representing a buyer, it was a big investor company that had that was selling it. They had purchased it. They were reselling it. must have had some kind of short-term note on it. I don't know what was going on with them, what they were carrying, but I'm sure they carried some kind of short-term loan on it.
Yep.
They paid $25,000 to sell the house instead of receiving profits.
Price of doing
My buyer
business,
got a
though.
great deal, so that was awesome.
Right? Worked out for you, right? Yeah.
So with that, these big companies are taking big hits because they purchased so many homes.
Correct.
Open Door laid off how many other people?
Like 18%.
18% of the workforce,
Yep.
yes.
Yeah.
So, which is significant, obviously. Yeah.
Obviously.
Quite significant.
Yep.
And then Zillow last week we reported was laying off their workforce.
Yeah. So we're
And
seeing,
Trisha's like, what do they do?
yeah, who works there?
They're a website.
And Zillow already got destroyed, if you remember, on their flip side. anyway.
Yeah,
that
it
whole
was-
division
That whole
closed.
division closed. So
Done.
yes, yeah.
Will Zillow go away?
Right?
No, because it's
Elon will
offering.
probably buy them before
Right,
that.
It's like, this is the greatest site ever.
Right.
Yeah, no, I don't see that happening.
Well,
but
no, because they
gosh, could you imagine?
definitely have a market because it's window shopping.
Yes.
Yeah.
Not realistic window shopping because I
The good
think
old
about like
estimate, yeah.
25% to a third of information on there is not accurate. Some of it is, but for the most part, usually not.
Yeah.
Yeah, for sure.
They've improved a little bit over the last couple of years on like posting under contracts and stuff, but
Yeah,
not
that's
substantially.
facts.
Vegas is, and we've said this before, there's been stuff circulating, but we're going to see it a lot more. Vegas is at the top of the most impacted as far as slowdown from
Well,
this
we also have the
shift.
most growth, that's
I
why.
would say we were at the top of the list as far as appreciation goes, too.
Yeah.
So,
Right.
So-
we just like to be on top for everything.
Correct, go big or go home, right?
Exactly. Vegas, baby.
Right.
Yep. And EXP, which is just a big real estate brokerage out there, they reported their Q3 losses. They were pretty substantial as far as the loss in revenue that they experienced in quarter three. And there's reports that, all these big brokerages are going to start reporting their Q3 numbers, and we're going to see some eye-opening numbers. It's
Well, not for us. We watch them all the time. But for the general public, they're going to be like, oh, so it's this.
Yeah, so it's pretty big. I mean, people are taking big hits right now. With that, before we get into all of the great topics that we have to cover today, one thing I want to mention that's going to be coming up on our show is there's so many deals out there right now. Like, just really, I've seen houses. I've seen 3 houses in the last week that were pretty decent houses listed under 300,000, single family residences.
Yeah.
And
Which
that's
you
crazy.
could not say that a year ago.
No, and
Those words were not coming out of your mouth. right?
No, yeah.
yeah, and I always thought that we'd start to see like townhomes and condos start playing in that price point. I didn't
Right.
expect single family homes, cute little bungalows, right?
Yeah, they're small homes. They're not, we're talking like 1,000 square footage, but still.
Older
Wow.
neighborhoods, no
Yeah.
garage, cinder block built, a lot
Those
of them.
garages, nope, 2-car garages. The ones I looked at, 2-car garages, 1990s built. I mean,
Really?
yeah, crazy, right? So
How did I miss those?
I'll show you.
All right.
Send them to me. So back to the point.
Back to the point. Because there are so many great deals out there right now in this market, Tiana and I thought that it would be a great thing to start having at the last few minutes of every show, like our featured home of the week. Tiana picks a home, I pick a home, we'll talk about it, we'll tell you guys what's out there.
What the numbers look like
talk
on
to
it.
lenders and get a breakdown of numbers so you guys can see actually what is going on. There's some deals out there, and it is not as bad as it looks as
Right.
far as getting into scenarios if you can work them out the right way. And that leads
Correct.
us right into Brad.
Dun, dun, dun.
Here he is. Our lender has some great news for us on how we can navigate through this and make the best of it. Brad, one of the things that you were saying is that, these hedge funds they're going to be buying homes. We were just
Correct.
talking about this,
Yeah.
and they're going to see these deals and buy these homes.
Right.
What does that mean?
Well, I think a couple things, and this is what I talked to you about, and I've got the article here, but at the end of July, Blackstone announced that they're sitting on roughly $30 billion in order to get back into this market. And so, what that means is they're waiting to their perception of bottom. And then at that point, they're going to come back in, and then you're going to have cash offers coming in. Granted, this time it's not going to be 100 over. They're going to be coming in under because they can. And you're going to have houses that have been sitting there for a long time, and people are going to be desperate to sell them. And so they're going to be a player at some time in the near future. And so what I'm telling my clients is, you want to get in and get your house before that happens.
Absolutely.
Because you're going to lose to those offers. That's just the reality, because it's going to be cash, it's going to close in a week or two, there's no loan to go wrong, and even though it might be a little bit under, people are going to be fed up because they've been sitting there for so long, they're going to be like, just sell the thing.
Yeah, it's going to be a perfect storm if you have
Correct.
cash.
Correct, and they usually they'll pick a price point, and I'm just estimating, but they'll say, everything from 3 to 500, go make an offer on.
Yeah, their buy box.
Yeah, exactly.
Yeah.
They're going to pick their buy box, and they're going to have $30 billion to come in and do cash offers. And so if you are in the market for a home, you want to get in before that happens.
Because what's going to happen if that happens?
Then you're going to be back to, you're going to settle.
They'll be your landlord.
Well, they'll be your landlord, that too, but you're also, a year ago, a lot of people were forced to take a house that necessarily wasn't their dream house, but it was all they can get.
Because all the investors were buying all the good ones.
Correct. And
Yep.
so you don't want to get back into that boat, because it's in my mind, that's where we're going to go with that. And then you touched on the rental thing too, is that they already have thousands of homes as it is. And so their goal is to get thousands more, because then they control the rental market.
What happens when you have market share? You control
Correct.
the prices, you control the market, you control everything. You have the bulk of the share of it.
Correct.
And this is quite conspiracy theorist or whatever you want to call this, but this is where my mind goes with this, right? Because that is something that I really have been concerned about. I believe there's enough people in different parts of like government, that law making, Fed, whatever, in all these industries that can work together with these big investors to cause this in the raising of the rates and the raising of everything, to open a door of opportunity for
Correct.
these hedge funds to come in and do this, because there's money to be made for everybody on the higher end of that.
Correct.
But all of the regular consumers and homeowners are the ones that get the shift of that.
Correct. They've definitely had meetings about this.
I believe so.
Yeah, and so
Again, it's out there.
There is
but,
a master
yeah.
plan with them, and unfortunately,
Yeah.
when you're talking about so much money that they have to spend, the average consumer just has no chance going up against that.
You can't compete against them.
No, you
right.
cannot. You
No,
cannot.
and you wouldn't want to. I think the feeding frenzy of spring and summer let us know that, listen, it is no fun going up against those hedge funds and those cash offers
Correct.
when you need a house. So I agree with you. I think now November, December, January, February is a good time to come into the market. The rates are a little bit higher, the monthly payment. Eventually, they're going to have to drop those rates to restart the economy, and you
Right.
can refinance out of that, keep your credit good for the first year, 18 months, refinance down when they come down, and
Yeah.
then you don't have to compete against those hedge funds.
Absolutely. And I really don't think we'll ever see 2% again.
No, we
But
won't. Yep.
4 to 5, we've all decided that that's okay and acceptable, right?
Yeah, and Fannie recently have just come out and predicted that rates will be in the 4.5% range in 2023.
Right.
So
That's great news.
So and Fannie and Fannie's owned by the government, and so for them to come out and make a statement like that, there's obviously something behind that is driving them to make that announcement.
Right.
Right.
So-
And along with that, that brings us back to this. Once that happens, we all know the market's going to increase.
Correct.
Yeah.
It's not only are the hedgies looking for bottom, but when the hedgies see that rates are coming back down, they know that that's going to drive people.
New buyers coming
the
on the
They
average-
don't
market.
sound so cute, hedgies.
The hedgies.
Hedgies.
Yeah, right.
Say hedgies, they sound so harmless.
Right, exactly.
$30 billion
You know,
hedgies.
if they see a buying frenzy from the average person, well, they're not going to sit on the sidelines anymore.
They're not.
Absolutely.
And
so-
they're smart. They know that's when you're going to make money. And
Correct.
real estate is the best way to start building that wealth. So
Correct. And
Call us.
and they're not flipping these homes for the
They're
most
holding
part. Exactly. So that's what just makes it a little different. They're not looking for a margin to flip.
No.
They're buy and hold.
Yep.
And so they're just looking for the right time to say, okay, it's go time.
Absolutely. Absolutely. I agree with you 100%. And since I have been seeing the rumors floating around about rates dropping next year a little bit, I have seen a bigger increase of cash buyers reaching out to me like, hey, but we'd like to make an offer on your listing. Their offers are not pretty.
Right?
You're like, I'll take
You're like,
your
I think you
offer,
got
but
the
it
wrong
hurts.
house. But yeah.
Yeah, I'm like, did I
This
read,
house?
is that
Yeah.
really a 2?
Yeah.
I think you meant to put a 4, but it looks like a 2. I don't
Right.
understand.
I had a offer come across my desk the other day, so $875,000 home, and they sent it to me at $625,000. I was like, okay, we're not in fantasy land, people. Come on.
Jeez.
So we'll sell you half the house.
Right. You can have the spool in the back.
Yeah, yeah.
Yeah, they're very optimistic. So we can get sellers, or I definitely, it's an item of negotiation, but it's happening a lot right now. Get sellers to pay a 2% buy down. Talk
And
to us
it's
about
roughly,
that.
one of the things that it's pretty common with us right now is really the only way to fight these rates right now is we're doing buy downs.
Yeah.
Yeah,
And we
I
have
just
3
did
different
one.
choices. You have a 3-2-1, a 2-1, and a 1-1. And essentially what happens is the seller is going to pay the difference in your mortgage payment that the lower rate accomplishes. And to give you an example, a 3-2-1 buy down, today's rates are right around 7%. For the first 12 months, your rate's going to be 4%. And then the next 12 months, it'll be 5%. And then the last 12 months, it'll be 6%. And then at the end of that 3-year period, it'll be at the 7% market rate that you locked it at. And the seller ends up paying whatever that difference is. And so what that does is it gives you obviously payment relief during those first those first 3
Couple
years.
years.
And it's substantial. I mean, I have an example here of a $350,000 loan. If we did this, and we did this about a month ago, so we had a start rate of 6%, but at that 3% on a $350,000 loan, your mortgage payment is $622 less for the first 12
Right.
months.
That's substantial. $622 less.
Correct.
That is very substantial.
Yeah, and then the second year, it's $427 less.
Okay.
And then the third year, it's $219 less, and then it goes to 0. And the total savings in that is upwards of $16,000.
Yeah.
You know, and essentially what you would do from the seller perspective is the seller is going to contribute $16,000 towards their closing costs.
Okay.
That money is going to be used to make these savings payments combined. And that's how a buy down works. It's as simple as the seller is going to pay the difference in the lower payment.
Okay.
So, and that's a 3-2-1. We have a 2-1, same concept. It's just that the savings is a little bit less, but it costs a little bit less.
Right.
And when I say 2%, it's roughly 2, and on the 3-2-1, it's roughly 3. Depends on the loan amount and where we end up interest rate wise, but it's not exact, but it's roughly in that ballpark.
Can I mention something really quick that I just
Yes.
seen here?
Yep.
$350 loan amount,
Yep.
possibility still,
Yep.
again, rates change daily, but
Yep.
the possibility still, monthly payment $1670 a month. That's not bad. I mean, for 350, what you'd be paying in a rental for the same house is going to be higher than that.
Correct,
Yeah,
absolutely.
go ahead and try and find a rental for $1,600.
Right.
Little single
Yeah.
family 3-2.
No,
Yeah.
and I agree. And some people push back a little, say, "Oh, it's an adjustable. We're not doing this
It's
again."
not an adjustable.
It is not an adjustable rate mortgage.
Right.
Your rate can never be more than the market rate that you locked in, and so it doesn't carry the same risk. You know exactly where this is going to be if you keep it for that period. And the idea behind all of these is rates are going to dip at some point. Every time we've had these spike in rates, it's never lasted more. I mean, and I could be off on this a little bit, but it's roughly 18 months to 24 months is when
Right.
how long these spikes last. And so there's going to be a period of time when you can refinance out of this.
Right.
And so you would go into it knowing that this is going to be the plan. And the beauty of this is you didn't pay it.
The seller paid it.
Correct. So even if 8 months from now we get a dip and rates drop to 4, if you had paid this yourself, well, you wasted a lot of money. The seller paid it. So who cares? Get out of it at that point, lock in the 4% rate, and then everybody's happy.
That was my next question for you. No prepayment penalty. So if they
None.
want to refinance out of this next year because rates are better and they can lock in that 4 without the rate even changing,
Correct.
they can do that.
Correct.
That's a beautiful option.
Correct.
That is a beautiful option.
It's a great way to help us
It's a
service our
security
buyers.
blanket.
Yeah,
You know,
it
you
is
know
a
that you're-
security blanket.
You know that you're covered. And then even, and we're still going to have some of these properties, the sellers are just stubborn they don't want to give anything. Well, we even have a 1-1. You can
Wow.
do it, you can do it for 1 year, and then the cost on this on a 350 house is only $2,600.
And based off of the analysis of what people are saying, rates should be better in the next year. So
Correct.
this should
Yeah.
work out. Again, I always tell people, look at the high number and never plan that's never going to happen.
Correct.
It could, but the likelihood of it is very low that rates do not get better before then.
Correct,
Yeah. Well, a
exactly.
few weeks ago, we speculated on that those rates would be coming back down to that 4.5% to 5.5%, and I was saying that it would be like beginning of 24. But now that Fannie has made the announcement, and they're thinking in 23, we're not that far away from it.
No.
Correct.
No, within a
So-
year definitely makes sense. And
Right.
after you buy a home, you can refinance after 3 months or 6 months.
6 months.
Six
Typically, they
months.
want six. They
Yeah,
want
6
you to
months
get
you
payments.
can,
Yeah.
6 payments and you can refinance. So it's really, this is a great option.
Right.
And $350,000 can get you a pretty good home these days.
That's the loan
Yeah.
amount, so
Yeah.
that doesn't include the down payment.
Yeah, so
Right.
that can get you a pretty nice home these days. I mean, even a pool. Like to talk about 350 with a pool earlier in the year, last year
We'd
was
laugh at it.
impossible. It's like no way ever.
Unless you were,
a community pool in a condo maybe, but
Yeah.
yeah. But now you can get a home, a great home for 350.
Correct,
Yeah.
correct.
Yeah.
And I can tell you, the most popular one is the 2-1. The one in
Yeah.
the middle, because the cost is right, it's in that 2% range. That's the most popular one that we're selling, and it covers you for 2 years.
And do make your offer for the highest. Let's work it out in negotiations. That way, if the seller counters back, you still got room to wiggle, right?
Yeah.
Come
Right.
in with your
Right.
come in strong, guys. This is the market
And
for
I
it.
feel like
and
from a realtor perspective too, if they call you and are talking about dropping the price 15,000, well, maybe the conversation is, let's not drop the price, but let's put on our listing that you'll pay for the 3-2-1 buy down.
Yeah,
And that can attract a buyer to say, well, okay, let's go look at this one.
yeah,
Yeah, we've definitely had those conversations, and I think a lot now, even our numbers are reflecting that we're having less and less reductions because they're not effective. People are freaked out by the interest rate.
Correct.
And so that would be a great way to address that interest rate. But I don't think that people are taking into consideration like the benefits from taxes. That interest rate is going to help you.
That's the other topic that you have here. So thank you, Tiana. Great
Look at that,
lead
sir.
into that.
Great
So,
segue.
Great segue, right?
First off, before we start talking about this, we do have to give our disclaimer. We are not tax professionals,
Correct.
CPAs. We cannot give tax advice. So we're just going to talk in general about this. With any of these things, you would talk to your tax professional about it, confirm all the details and everything before we get started. I love to disclaim, so there we go.
Oh,
Yes.
disclaim and disclose.
Disclaim and disclose. Yes, D&D.
Like-
So tax deductions.
Yeah, and that's, one of the things that regardless of the market or where interest rates is the tax benefit of home ownership doesn't go away. And so even with these higher interest rates, you're still going to have a tax deduction on the property, and typically, and everyone's tax situation is different. So again, talk to a CPA, but in general, there's financial benefit to owning a home in that you get tax relief based off of the interest that you deduct, as well as the property taxes and other things that you're able to do. So that never goes away, regardless of what the property's worth and anything else that happens, you still always will have possible tax benefits.
And why did I not even think about this? When I seen your report come through, I was like, oh yeah, because over the last couple of years, I have a really great interest rate on my properties. So that deduction,
Your W-9's a little bit less, right,
you get
yeah.
you get that document from your mortgage company, you give it to your CPA, and you're like, give me money back for this.
Right.
And that's awesome. It's a little nugget that you're not expecting.
Right.
And that number's a lot lower, and you're like, oh, it used
that all
to
I
be
paid?
better
Right,
because
yeah.
the rates used to be so much higher. No,
Right.
Correct.
didn't even take that into consideration. That is huge.
But we can't keep saying that the rates are so much higher because they were here in this 7.5% range. What was it, 17, 18?
yeah, and that's
yeah,
when I used
yeah.
to get the better deduction.
Right.
Right.
You're like, yeah. So it's not like this isn't the regular real estate ebb and flow and something's happening for the first time and we should be freaked out. out.
Yeah.
You know,
No.
so.
Yeah, but it's a nice, a really nice benefit at the end of the year.
It
because
is.
It is, I don't know the formula, how it works. I know you don't get it back dollar for dollar, but
Yeah.
you get a substantial, credit
Yeah.
because of that. So that's
Yeah,
really good.
And there's different ways your CPA can get creative with it and decide how to maximize that for you. But again, that's why you would talk to your CPA.
Yeah.
Exactly.
So, yeah.
That's huge. And then the other renters. Do renters get any deductions when their rent goes up 6%, 10%, 20% that we've seen last year? What tax benefits do they usually get?
They get what we call nothing. Yeah.
Zero?
The official term is
A little zilch, zero,
is
nada.
Nada, yeah.
Yeah.
And that's just it. Your rent is 100% interest rate because
Yep.
it is all going away, and your landlord is thanking you for that. And so it's when you talk, oh my God, rates are so high. It's like, well, every single dollar you're spending on rent, you're giving away.
So
Every
if your landlord
dollar.
has a 7% rate, does he pay that or do you?
You're paying that 7% for him.
You're
yes.
paying
Yeah.
that 7% rate for
But
him.
who gets the tax benefit?
Your
landlord.
landlord.
Okay.
Yeah, and then going back to the Hedges, they because they have so many homes. I mean, the likelihood is that you could see a rent increase every 12 months as well. And so, one of the great things about when you buy a home, you know what your cost is going to be. You've locked it in. You have a 30-year fixed, and you know you're able to calculate what your cost is and account for that. Where when you rent, there's a little bit of unknown.
Yeah.
You know,
Not a
sometimes
little bit, a
sometimes
lot.
you get lucky and they don't raise it, but sometimes you don't.
Yeah. The only thing that could change is your property taxes, which,
Mm-hmm.
usually we see minimal changes. We have caps here in Nevada if it's your primary residence of
Yep.
how much they can increase.
The 3%
And I'm
cap,
expecting
yep.
next year we're going to see a little bit of reduction on those. So our payments will get a little bit lower next year
Right,
because
well,
of the
fingers
price
crossed.
difference.
Yep.
So,
So
Fingers
all
crossed.
of those
Yeah.
buyers who are afraid to come into the market right now are going to have benefits, appreciation, taxes.
yeah.
We've got
Property
that cap.
taxes lower. That makes your payment lower.
Yeah.
Correct.
Yeah.
Yep.
And,
Those-
and you can play your music as loud as you want.
You can, and yes, and you can paint your walls.
Yes, any color you decide.
Yeah, you can do it pink, purple, doesn't matter. It's your house.
Right.
Yeah, you don't have to talk to anybody on the inside. If you live in an HOA, you got to talk to people. So
Right, yeah.
good luck with that.
Yeah.
So last thing that we have to do in this show, we blew through it, so we're going to be wrapping
goes
up here
fast.
in a minute. Yeah, we always just have so much to talk about. The last thing, average appreciation across the U.S., 43%. This price drop, I mean, sellers are, oh, this is awful. And I know no one likes to lose money, but the money wasn't in your pocket yet. So this was a number that was just out there. With 43% appreciation over the last couple years, we can handle this.
Oh,
Correct.
we can.
Correct, and this is what we talked about as well, is that one thing is core logic at the end of the second quarter, the average homeowner across the country has $300,000 of equity, and that equates to the roughly 43%. And I get people calling me, oh my God, here we go, just like 08, 09. Well, the average equity in 08 and 09 was 6%.
Right.
And so that's why it tipped over so quickly. Is that when we had the aggressive price drops, people were immediately upside down, and then at that point they said, "Well, I don't want this house anymore."
I'm just going to
So
walk away from it.
short sale it
Yeah.
off.
Correct,
Or
and
short
that's
sell
why
it, yeah.
it was short sell mania. But
It was.
in this case, people that have that much equity, they're not going to short sell. They're not going to foreclose. If anything, they would sell. So the market is just much more equipped to handle this. And if the average equity is 43% and then it drops 15% that a lot of people are predicting, well, then you still have substantial equity. So I really don't see any parallels to 08 and 09 as far as that goes.
Yeah, I don't either. I've preached that on this show a few different times. Like, the conditions are different.
And not to
This is
mention,
a new
everyone
ride.
actually had to qualify for a loan now. Imagine that.
Yeah, we had to qualify. People had to put their own money down.
Correct. They have skin in the game. They actually had to prove their ability to repay the loan. And so typically people that have put money in are a lot less likely to walk away.
Yeah.
Those are the
and then you
facts.
throw in the fact that they have 43% equity, you'd be a fool to walk away.
Plus, their rates are probably lower and their payments
Correct.
are probably very affordable right now. So
Correct.
they're-
Exactly.
They're, they're not
A lot of
stretched.
2 and 3% rates, and so they're not going to want to get rid of that. And so I really don't see any parallels as far as that goes.
Yeah, absolutely. And the people that are selling right now are motivated. They're
Correct.
they're motivated. Well, most of them.
The vast
most-
majority at this
vast
moment
majority.
are
99%,
definitely more
right.
They're
motivated.
motivated, which means that they're serious sellers. They have a purpose for selling. They have a
Correct.
need to sell. So let's work it out. Work it out with the buyers because people are buying are motivated. But the buyers, I really think the buyers that are buying in this market are making very smart and keen decisions because I've said it before and I'll say it again. Stop doing what everybody else is doing. Like,
Right.
don't
Right.
follow the herd.
Yeah.
Come on, this is when you
And
you
even
separate
if
and
you're
do it a
not
little
looking
different.
to move, if you're looking to get into investment, you have a house, right? And
Yeah.
you just want an investment property so you can be the landlord and have that renter pay your high interest rate and make that income producing property. Brad has a great program for that.
Yeah, no, we have it's a DSCR program
Love it.
that allows you. It doesn't care about your personal income at all. It's about the cash flow of the property, and there's a minimum down payment requirement based off of your credit score and whatnot. And literally, we're not even going to look at any of your personal income. If you have the down payment, you have the credit score, and the property cash flows within the debt ratio, you can buy investment homes, and it's a program that rates a little bit higher, certainly, but the beauty of the
But
program.
the down payment's lower, right? It's not their typical 20% investment, is it?
Correct. It's tiered depending on credit again, but
Okay.
but it goes as little as 15% down. But the beauty of it is they're not going to qualify you unless that property cash flows the right way. That's their
Right.
that's their approach to it. If the rent is going to cover the mortgage essentially, then they're willing to do it. So you can get into these properties that aren't going to be a cost to you. And then at that point, you just rent it out and you collect rent and everything works. And I'm literally not even going to ask for your tax returns, your pay stubs, any of it. Not interested.
Right, because
all
it's about the property.
Correct.
That's amazing.
I love that, and that gives people who are owner occupied, they can stay put. They can either do a HELOC or use their savings, come in at as low as 15% down instead of the 20%, buy an investment property, gain those tax benefits, get the appreciation of that property, have a renter in place, and start building their portfolio.
Correct.
Absolutely.
Correct.
No, that's a beautiful thing, and those are makes me want to go buy more homes.
Yeah, let's get them all.
Right.
So, Brad, how do people reach you? You have so much good, valuable information for people to talk to you about.
Yes, the best place to reach me is on my cell. I believe it's on the screen now. It's the 310-415-3901. Also, if you go to if you Google JFK Financial, it'll take you to our website, and you can click on me there. Either one of those ways is a great way to reach me. Oh, there we go. There they all are. So,
Look.
Yeah. Perfect. Reach out to Brad. Talk to him. Get going. Get qualified. Let's get you into this market while it is good for buyers.
And investors,
Yes.
owner-occupied investors.
To reach me, 702-308-2878. And best way to reach me is on my cell phone. If you want to send in listener questions, that's vegasrealtycheck@gmail.com. And Tiana, how do people get a hold of you?
They can call or text me, 702-379-9948. They can always email me if they'd feel more comfortable at 702househunter@gmail.com.
Yeah. And we have iMessage on, if you're watching us on social media or anything like that, you can always contact us there as well.
Yep, and starting next week or the week after with our home
Featured
spotlight,
homes.
you
Yep.
might be motivated to pick up that phone and be like, hey, I want to check out that property.
Yeah, we'll have to talk to Brad about getting some of these 3-2-1 buy down options on these homes to see what they would break down at.
So you know exactly what the payment will look
Yeah,
like.
to know what the payment would be. That
Absolutely.
would be great. We could run some scenarios with you guys. So we're looking forward to that. That's going to be new and exciting. We're shifting along with the market, along with our show is also shifting along with the market for the market we're in. We couldn't have done this last year because the homes were gone before we had time to talk about them.
Right.
Yeah, now that they're sitting for a minute,
Yeah.
we
Right.
get to really let you know it's not that frenzy anymore.
Absolutely.
Correct.
Keep watching. Tell your friends. Like, comment, share, and we'll see you next week.
Have a great week.
Yep. Thank you. Yep.